Folks, we have a lot to break down in this video with little time to waste. We have Apple's earnings to go over, Amazon, Square, Coinbase, and a bunch of other ones. So let's just dive right into it. If y'all find value, smash that like button and make sure to subscribe. We're almost at 30,000 subs, guys. We're so close. Make sure to subscribe. I appreciate you all as always. And with that being said, cheers. Let's dive right into it because, again, we have zero time to waste in this video. I'm freaking pumped. We have Amazon to go over first. And mind you, I have not looked at these earnings yet. I've not seen the stock's reaction yet, so let's see that stuff together right now, as it is 5 p.m. and these earnings are definitely out. Usually Apple takes a little bit longer. They take their time. They don't drop earnings right at 4:15. Usually it's at 4:30, 4:45. So they're probably out by now. So let's see, starting off with Amazon, AMZN, which is now, holy crap, look at that, guys. It is up $11 after the bell. Let's go, baby. And this is a stock that I was buying in the 90s, 90, 95 bucks, and now the position is really starting to play out. Look at this. Amazon is up $9, $10 actually after the bell, which percentage-wise, we're talking 7% for a company the size of Amazon. That is just unbelievable. So you can see it went up around 0.5% on the day, so nothing crazy in the midst. I guess in the midst of a red day, that's pretty good, but really it wasn't anything crazy. So let me see what they ended up doing, guys, and we'll do a deeper dive probably tomorrow, so make sure to keep in touch with the channel. We'll probably do that tomorrow, but it looks like they ended up doing sales of $134.4 billion, which beat the 131.54. That's great. And it looks like here, not revenue, but EPS, where the heck is it here, guys? Oh, there it is. Adjusted EPS came in at 63 cents, which beat the 34 cents expected. So they completely destroyed the adjusted EPS, guys, by a mile. I mean, holy crap, guys, that is a big beat there. And let me see anything on guidance out of Amazon. It looks like they're guiding for Q3 sales of $138 to $143 billion versus the $138.3 billion expected. So sales guidance for Q3 is above the estimates, which that's great news. That's what you want to see for sure as an investor. And the stock is up now over right around $10 per share after the bell, which is really impressive, guys. Now we're breaking out the highs on the 4-hour chart. We're above the highs now from the last couple of weeks. We're above the moving averages, obviously. And who knows, will this now bring Amazon stock closer to all-time highs? It might. I'm not sure exactly. Wait, what is the all-time high on Amazon stock? I forget, actually. I think we're well off of it still. Yeah, is it 188 maybe? Yeah, it's 188. So could this start taking us towards the mid-hundreds and eventually back towards all-time highs? Maybe. I don't know. It's probably going to take a couple quarters for this to get back to all-time highs. But for now, it looks like it's breaking out, guys. And, I'm loving it. Again, as an Amazon shareholder, I'm loving this, and I'm sure a lot of you own the stock as well. Let me know if you do in the comments. This is really good news. Now, Apple, I also own Apple, and I'm sure you guys do as well. Pretty much everybody out there, guys, if you own any US-based index fund, you own Apple or Amazon. They're a big chunk of your portfolio, so you guys better pay attention right now. We talked about Amazon. They're up a lot. Let's see what Apple's up to, guys. Let's see what Apple is up to right now. So it looks like, Apple is starting to slip. Guys, look at that. Apple is down, it looks like about $3 right now after the bell. Initially, it went up to about 196, so that was a big move, about $5, 2.7% initially to the upside. But now we're giving back all those gains. We're now down about, let's see, 1% or 1.5 after the bell. And honestly, guys, it's not a big deal at all. I'm kind of teasing. It's not that serious considering how much Apple has gone up. I mean, this is not that big of a deal. Sure, it's up a little or down a little bit, 2%. Oh, boo freaking who. It is still holding an uptrend, and it's up from $125 from back in the beginning of this year. So if you're sad about this, cry me a river, guys. I mean, this is how the stock market works at the end of the day. It's reality. So it looks like Apple did EPS of $1.26, so they beat on that because the estimate was $1.19. That's good. And they beat on sales, $81.8 billion versus $81.36 billion expected. So beat EPS, beat revenue. That's good. And it looks like here, China revenue, what's that looking like? Let's see. China revenue up year over year. It looks like Europe up as well. But we have America and Japan, or Americas and Japan revenue down year over year. It looks like iPhone sales came in at 39.5 or 7 billion versus the estimate of 39.8. It looks like Mac sales at 6.84 billion versus 6.36, so that beat. And like Amazon, guys, I'm probably going to do a video tomorrow on Apple's earnings a little bit more in depth, so make sure you all subscribe as we're almost at 30,000 subs, as I'm sure you guys know. And the goal after that is 50,000. We're getting there. We're getting there, guys. I appreciate you all for your support, as always. So, yeah, that's a quick breakdown on Apple. It's selling off, but boo freaking who, guys. It's still uptrending. It's still, holding a very nice uptrend. So, what do you guys think? Let me know your thoughts in the comments on that. And Coinbase is one that I'm really interested now to pull up and see what's going on, because this is one that got slapped by the SEC, more than freaking slapped. They got freaking bashed on top of the head by, I don't even know, a hammer, and the stock got destroyed, and then it ended up rebounding to over $100, and I'm not sure what it's at right now, but let me see. Let me pull it up and see, as the numbers now are officially out after the bell, and it looks like here it's not doing much. All right, so it hit 114 a couple weeks ago, pulled back to 90, 87, 90 roughly, and now it's at $92. Actually, it's up a little bit after the bell, which is pretty interesting. And at one point, it hit over $100. Holy crap, guys! Look at that. We hit $101 a share, and then after that, we got to 86. Now we've rebounded to 92. Talk about volatility! Holy crap! From 101 to 86. That's a drop of 13.5%. Unbelievable. So Coinbase, it looks like they ended up doing 42 cents in EPS, or they lost 42 cents rather, which, let's see, did that beat or miss or what? Where the heck is it, guys? I'm not seeing it here. Looks like here that beat the negative 78 cents expected, so that's good. They beat EPS, and they beat on revenue by a good chunk, 707 million versus 643 million expected. So they beat EPS, beat revenue, and it looks like here, guidance. I'm not seeing anything on guidance, but overall, we shot up, and now we're pretty much at break even after the bell. Up a little bit, but still pretty much at break even. So Coinbase, guys, am I chasing it here? Not necessarily, but if I see a nice bounce, a confirmation of a bounce, and we start to break out towards 100 plus, that could be a good trade right there, a momentum play. At least in my opinion, guys. This is all my opinion. So the next one here, folks, is Square. Well, I guess it's formerly known as Square. I still call it Square, but it's now called Block. The ticker symbol is SQ. Let me pull it up and show you guys. And well, it doesn't look so good for Block right now, guys. The stock's down $3. It looks like, yeah, over $3 after the bell, and it's right by the 180 SMA right now on the 4-hour chart. And overall, in the past, looks like a couple of days, it is down 14, almost 15%. Really, in the past 2-3 days, it's down that much, which is not a good sign for the stock. But at the same time, it is holding the moving average right now, and it's technically holding an uptrend. So it's the moment of truth for the bulls, right? Are we going to get a bounce off of this trend line, right? Are buyers going to come in? Let's see, guys. So they ended up doing, let me see here. Let me pull the live news up. Looks like they did EPS of 39 cents, which beat the 35 cents expected, and they beat on sales as well. 5.54 billion versus 5.08 billion expected. So they beat EPS, beat on revenue, and it looks like here their loss narrowed, which is great. You want to see that year over year for sure. And let's see, anything on Bitcoin revenue? I'm always interested to see how much of their revenue came from Bitcoin. It looks like transaction-based revenues up 11% year over year to $1.64 billion. Subscriptions and service-based revenues up 33%. Awesome. To $1.46 billion. And let's see, anything else? Profit grows 27%. So not bad, guys. Not bad for Square. And it came into the earnings oversold. And maybe that's why it's not really dropping much more. I mean, sure, it's down a little bit more after the bell, but it was already pretty oversold, which honestly, this could open up for maybe a bounce back, after, maybe as the dust settles over the next couple of days. Let's see. So that's Square, guys. Airbnb is another one that I want to break down very quickly, which their earnings came out, and they were pretty oversold heading into earnings as well, and they're right above the 180 SMA right now on the 4-hour chart, which is right in the mid 130s, right around 135, 140. So live news tab here. Let's see. They did 98 cents EPS, which beat the 71 cents expected, and they beat on sales 2.48 billion versus 2.20 billion expected. So double beat there for Airbnb, and they see Q3 revenue of, let's see, 3.3 to 3.4 billion versus the 3.22 billion expected. Not too bad, actually pretty good. That's above the estimate there. So revenue's good. They beat EPS. Revenue guidance is strong. Looks like here, bookings value 19.1 billion, up 13% year over year. Nights and experiences booked 115 million, up 11% year over year. And you guys know we're in the summer months now. Airbnb sales, are going up. You guys probably know that. So not bad for Airbnb, guys. And it looks like here we're not getting a huge pop. Actually, we're down after the bell. But this could be setting up for maybe a move here as the dust settles. Maybe, of course. Nothing's guaranteed in the markets, but this is quite interesting. The next one, guys, is DraftKings, DKNG. Let me pull it up and show you guys. Holy crap, look at that, guys. Oh, my God. DraftKings is up not one, not two, not three, but about $4, $3.50 actually, after the bell, which is huge, guys. We're talking a move of 12%, roughly 11.5% after the bell for DKNG. That's insane, guys. So what's going on here? It looks like they did EPS of 14 cents adjusted, so they actually came in profitable, which the estimates had them at negative 25 cents. So surprise profitability for DraftKings here, and revenue came in at $874 million, which beat the $759.5 million expected. Holy crap. So they beat revenue by over $110 million. They destroyed EPS, surprise profit. And let me see here, anything else? And the reality of the matter is, guys, this app and what this app is, which I don't know if I can say the G word on YouTube here, I'm not sure, but let's just say it rhymes with mambling, right? All these mambling apps, the sports mambling apps, they're growing like crazy right now as they're getting legalized throughout all the different states in the U.S., and their sales are doing really good. I mean, we just covered them. They're breaking out on, sales wise. At least they're beating, EPS, revenue. I'm not sure year over year how they're doing. I have to double check that, so I don't want to, speak too highly of this. But from my understanding, over the past couple of years, they've grown tremendously, and there's probably way more growth to come because more and more people, the reality is, probably sad reality is, they're getting addicted to sports mambling. You guys know what I'm talking about, right? They're getting addicted to it. They want to do it more and more and more, especially during NFL season, NBA season. That's what's going on right now. And it's just the reality of the matter. Do I agree with it? Do I like sports mambling? No, I don't. I think it's a waste of money. I think everybody out there is better off investing in the S&P 500 or investing in themselves. Go buy some books, Go take your kids out, go on a vacation instead of blowing it on sports mambling. But the reality is more and more people are doing it, and they're marketing. The crazy thing is, which is kind of predatory, we're not going to get into it in this video, but they market towards kids. We all know that. They market towards younger people. And honestly, they market it towards younger people that can't even mamble yet because they're not of age yet. So when they do get of age, they're like salivating at the freaking mouth. They can't wait to do it. And then they download all the apps. They do all that. And they go on these rampages. And that's how the habit starts, right? But that's a whole other topic for a whole other video. We're not going to get too deep into that in this one. But, DraftKings, the reality is more and more people are going to do this. And if you do it responsibly, kudos to you. I do it responsibly sometimes. I'm not going to say I never sports mamble. I do it responsibly. But when you're marketing to younger people, the reality is, guys, they're not going to do it responsibly. They're going to spend a ton of money on it. They're going to get hooked on it. It just depends on who you're talking to, right? Me personally, I can easily, put $100, for a month and lose it, or win a little bit, lose it, and not care and move on with my day. But other people, they need to do that every day, right? Then that's when the habit builds and it's bad. But that's a whole other topic for a whole other video, guys. And that's enough for DraftKings, I'd say. The next one here, the last one for the video, is EXPE, which this one completely collapsed throughout the day today, guys, down 17 or 16%. Holy freaking moly. So it looks like they ended up doing, let me see here, 289 EPS, which beat the 232 expected. That's good. but they missed on sales. 3.36 billion versus 3.37 billion expected. I'm not seeing anything else here on guidance or anything that would hint towards why it's freaking falling like this. But yeah, it's completely collapsing, guys. And the funny thing is, with that Moomoo link, you can actually get a free share of Expedia or Tesla if you fund your account with at least $5,000. And if you fund your account with at least $100, which is not that much, listen to this: you get 5 stocks each up to $2,000. And if you fund your account with at least $1,000, on top of those 5 stocks, you get 10 more stocks, totaling 15 stocks each up to $2,000. Crazy deal, guys. Again, that's from Moomoo, the sponsor of today's video, so use that link down below. I appreciate you all as always, and I guess with that being said, we're going to wrap up the video. I'll see you all in the next one.